Welcome everyone to this Q&A meetup on the best brokers for index investors in Belgium. Many of you have seen that we have developed with Ton, who's here as well today with me, a full overview of online brokers for index investors in Belgium. And you can find that at firebelgium.com/brokers. There is a podcast episode that's where we basically describe our understanding of how all of this works. And we provide our analysis and some kind of recommendation towards the end. We're not financial advisors, but we do share our understanding of how things work. We don't have the ultimate answers to everything, and things are changing a lot. So as you might have seen already, some of the information in the table has already changed, which we'll discuss also today, if interested. All right, let's go. So for those who don't know me, I'm Sebastian. I'm the founder of Fire Belgium. 1 second, I'll be back. I'm an index investor for the past 10 years, and for the past 5 now, I've been living without having to work for money. And so this is more or less what most of my day looks like. I'm spending a lot of time with my kids and my wife, and then when they sleep, which is normally now, but one of them is awake, then I do some work. And I'm very happy to be able to do this with the support of a team behind me that is financed by the business that Fire Belgium runs. So I'm not getting paid by this business, but I do pay some people to help me. And so that's why we're able to produce more now than we used to. And you'll see in a minute how we actually make money, because we might be interested. We give talks, we educate, we're here to raise awareness about personal finance, financial independence, pension planning, index investing, basically common sense personal finance and how to use money to make your life good. And mostly, debunking a lot of the stuff that the financial industry is trying to sell us and make us care of. Basically, it's mostly financial knowledge. So Fire Belgium, something that started a few years ago. It's now 8,000 members on Facebook, and it's an evidence-based personal finance education community and business. And we are present on multiple platforms, which you're probably aware of now. But feel free to connect on all of those. We're quite active on Facebook and LinkedIn mostly for now, and YouTube with the podcast. And so yes, there's a podcast if you're interested in my story about how I reached financial independence in 7 years. So that's like 5 years ago. It's podcast number 5. And then the podcast for this episode, for this Q&A, is podcast number 11. We've been a newspaper as Fire Belgium with my story and with the basic knowledge of index investing and hopefully helping people basically take control of their finances. So we're on a mission to help people just enjoy better financial security and freedom. And there's me, as I just introduced myself, but there's also Ton, who's playing an important role today and in general with Fire Belgium, because he's joined me as a consultant and instructor. He's doing research with me, and he's also helping, is consulting with people who want one-on-one support, and he's also helping develop the course, the index investing online course, which we're going to talk about in a minute, in Dutch as well. So this is coming soon. We are working on it, and Ton is doing a lot of work. And he's been an index investor for the past 4 years as well. So lots of experience there. He's helped a lot of people get started. And how we can help? Yes, our expertise is really in index investing and financial independence. So we do a lot of personal finance generally, but these are the core areas where we specialize. In terms of services, as I said, we're available for individual consultations if you want support one-on-one. There is an index investing online course that's been developed already in the past 4 years now. The 4-step learning and investing system. So it's a very complete way of learning from zero to everything, having everything in place, optimized for taxes and performance, super passive, etc. So we're going to talk about this a bit later. We do provide workshops, and we do speak at conferences. We do financial well-being conferences or workshops for companies. If you're interested for your own company, you can offer this to your HR department or your management. And we do participate in workshops and conferences, all of this to raise awareness and help people get started or benefit from index investing. There's a free workshop, speaking workshop. There's one on the website that's always available, where we basically explain the basics of index investing. We're going to cover a very little bit of that here today. But if you're a complete beginner, I recommend you go check this out. I'm actually going to share the link in the chat, so you can go get it now if you're interested. The link is not showing anyway. I'm going to also put the link to the podcast. So that's the show. We have also, I think I will put the link to the Facebook group, which has 8,000 members, as I said earlier. So you have it there. And then there's a link to the one-on-one consultations if you want to book an hour consultation with me or Tone. And then what else there is? The link to the table of brokers, which we have, which hopefully you already have access to, but there you can download it, make a copy for yourself. That's it for now. And then I'm going back to my presentation. So these are all the guide. Yeah, so we have FireBelgium.com/guide. There's a beginner's guide that you can download. And so that's what we discussed earlier. We have the podcast and the community. All of this is free information to support people. And then some of the examples of the talks we've given. So it's about investing, financial independence, and we've given talks to a few different entities in Belgium already. Strong disclaimer: we are not financial advisors. We're not regulated in any means. We are just people like you and like you and everyone else. And we're here to share the knowledge that we've developed. We understand. We don't give you any personal finance advice, but you are here to learn, and you're responsible for personal decisions. This is a paper that basically a slide that says don't sue us, because we have this disclaimer. It won't work. All right, so the role of brokers. Let's go. So this is for people who kind of are at the beginning. There were about 7 or 8 people from the poll we've just run. So we'll do this fairly quickly. So on the stock market, we have a lot of companies that are available for us to invest in. It's very complicated to invest and pick stocks and do that effectively over the long term. So what we like to do is invest in index funds. An index fund is basically a basket of securities, a basket of shares that is built by an investment management company following a specific investment strategy. There's ETFs and index and funds with all sorts of strategies, including active strategies, but we like passive strategies. And then ETFs is basically that, but turned into a product that is available for trading on the stock exchange as if it was the share of a company, right? So it's the share of a fund that we buy as an ETF on the stock exchange. And us as an investor, we can open a brokerage account, usually online, even on our mobile phones. And from there, we fund it, and we can get shares of ETFs via the stock exchange through the broker. And that's what we're going to discuss about, obviously talk about today is the broker account and the different platforms that exist. So basically the money goes back into the system, right? So the money goes back into the fund buys more shares, and that's how the fund grows, and that's how they basically issue more shares, which more investors can buy. And so that's a way of investing in the stock market. And what we like to do is use a global index tracking strategy. So we invest in the entire world. Instead of picking a specific stock, a specific sector, or specific geographies, we invest in everything, because that's how we get maximum diversification. And the passive approach has been proven to be more effective than any kind of active management over the long term, because of the fees, but because of all sorts of other issues as well. And so investing in ETFs, the ETFs are built and managed by the fund managers, which you can find here. These are the main ones. There's more, but these are the main ones. Vanguard iShares, Deutsche Bank with Xtrackers and SPDR. And then the main index providers, which are basically the recipes upon which are built the index funds. This would be FTSE Russell and MSCI. And then obviously we need brokers, and that's what we're going to discuss today in more details. Now, why investing in index funds? For those of you who are completely new to that, I'm going to go through this quite fast as well. There's countless studies on how individual investors are just continuously underperforming the market. So this is just one of them, Dalbar 2020 Quantitative Analysis of Investor Behavior Study, which basically shows year after year that the average investor in equity markets is getting a much lower return than the equity market itself, right? This number on the left is its average inflation over those 20 years. And in the past year and a half has been much higher. In 2022 alone, it was 9.6%. So this is something that we have to basically beat. We have to do better than that with our investments, because otherwise our savings are losing value. What we want is our savings to gain value. The average equity investor over that period of time here, which is 20 years, usually is invested in financial and bank products. This is what people invest in. But that money is then invested in the actual equity market, which performs far better than those products. And that is where we should be investing. And basically the money goes there, but in the middle, there's something that happens that takes away about 4% of annual returns. And this is what we are essentially fighting for, because those 4% will have a huge impact on our personal finances. And so this is due mostly to fees and emotions and speculative behaviors from the active managers and traders, etc. And so now people say, yes, but that's because you picked the wrong fund. Yes and no. But basically, we don't know which funds are going to perform better than the market in advance. And clearly, over like the longer you invest, the smaller are the chances that you will pick a fund that will outperform the market. And even over a 1 year period, most funds underperform. So there's only 30% of investment funds that do better than their benchmark over a 1 year period. And as you invest for longer periods of time, that percentage of chance of doing better than the market goes down. So it's basically like, we took 25 years as a horizon, but there's basically 95% of active funds fail to beat the market over 25 years. So we have only 5% of chances of doing well. This is something that's been known by the academics and researchers for a very long time, more than 50 years. And it's basically, we have worse odds than going to the casino when we buy actively managed funds, which is what the banks are selling us, right? So most people in Belgium who are investing in the stock market are doing so through mutual funds or stock picking, and that has much lower chances of beating the market. So the odds are worse than the casino. So what's the solution? We say buy the casino. So buy the entire stock market, right? Instead of picking specific stocks or trying to find an active manager that does well, we want to buy everything. And we buy and hold for the long term, no trading, no speculation, minimum transaction fees. So it's optimized in that way. And we minimize costs and taxes. We cut the middleman, pick low cost index ETFs, optimize for taxes, etc. And something that's quite amazing in Belgium, for those of you who don't know, there's no tax on stock capital gains at the moment, and hopefully it will stay like that, but it might change. Still, even if it changes, it will remain one of the lowest in Europe. So investing in stocks is really amazing in Belgium. So we buy the casino instead of having cash on a savings account that's losing to inflation, instead of buying banking products that are subperforming, that are doing worse than the market, which is this, right? This is the average of returns. We want to get at least the average, so we buy the market, right? So that's a strategy. And by doing so, we minimize fees, and we minimize emotion and speculation by doing long-term buy and hold. And we reduce basically the costs or the losses compared to the market. And the impact on the average person's personal finances is quite strong. This is just an example using the average Belgian saver that puts aside 360 euros per month, and over 40 years, it amounts to around 180,000. If you keep that in savings account with the usual inflation, it loses purchasing power over time, right? It's obviously been far worse in the past year. But savings accounts are not doing well. This is including the interests that the savings accounts are giving. If you invest like the average investor using bank products that don't perform so well, then you do make some profit, and it's good. You can double, how much you would have instead of having it on a savings account. It's quite good, but it's far worse than if you were investing as an index investor. And this is not something that I put here I'm not exaggerating the numbers here. I've actually taken conservative estimates and assumptions. And still the results are insane, mostly because it's over 40 years, right? So this is the main thing that makes a big difference here. But it basically helps you quadruple how much you have over your lifetime in terms of money. And so if you're saving for your pension, this is a huge difference. So index investing really brings huge benefits. Right, let's move faster. Now, it's not only about making more money. It's quite important, but it's not only that. Obviously, we're part of the FIRE Belgium community. What we look at is also that it buys us time. So to get to the same point, to reach the same goal, we can get there in much less time. And in this case, 13 years. So for the average Belgian investor, saver and investor who puts 360 euros a month, so that's kind of, it's the average in Belgium. And I would expect most of you to invest more than that. So the impact is probably greater for you. But you can reach goals such as retirement, basically decades in advance. That's decades of freedom, decades of basically, if you don't like your job, then this is amazing. And if you do like your job, then you just have more security, more control, and that's quite amazing too. So how to invest in index ETFs? It's fairly simple in terms of like high level things. You really have to start by learning the basics. And I think a lot of you already have that. Once you have the basics, you develop a personal investment plan. And I think those two elements here take quite a bit of time to do properly. And then you open a brokerage account. You can start with a brokerage account and testing things in advance, of course. But you really want to get to a fully developed personal investment plan to feel like to have a plan that works long term and invest in 2 or 3 selected ETFs. You usually don't need more than 3. And this is usually surprising a lot of people, but it's truth. It's effective investing is extremely simple. And then you stay the course and benefit from long-term growth. How long does it take to learn? Usually 6 to 12 months alone, I would say, to do this. A lot of people in the community who learn on their own take about a year. And if you work with someone who has done it already, it can go much faster. Obviously, that's what we do. We accelerate the learning of people and prevent mistakes. And once it's in place, it takes only 5 minutes a month. So it's extremely effective in terms of how passive it is, right? It makes a lot of money and you don't have to spend much time on it. Now, here are 10 rules of evidence-based investing. I don't think we need to go through all of them in details, but they're fairly straightforward, right? It's what you hear a lot. Live below your means, learn the basics, invest early and often, diversify, manage your risk, minimize costs, optimize for taxes, keep it simple, never try to time the market, stay the course. These are the Bogleheads rules, right? Bogleheads investing rules, adapted for Belgium. And here's the 4-step learning investing system, which is something that I've developed based on my experience learning for myself and then teaching this since 2015. There's 4 steps in the 4-step learning investing system, of course, and there's 2 tracks. There's the general knowledge track, which is what you can find online, in forums, in books. Is like, how is this normally done, right? General knowledge. So this is what's available out there. And the personal journey is what you experience as an investor and what you have to go through to get to a successful investing. And these are 2 parallel tracks because you have to absorb the knowledge and then apply it to yourself and sort of keep going from there. And so when you start, you have to understand index investing and get the core knowledge, of course, and figure out also what's your personal situation, what your investment goals are, and what's your risk capacity and all of these things. And then you start figuring out, if you understand, you learn about asset allocation, taxes, ETF selection criteria, and all of this, and you apply that to yourself. And so you can start selecting your ETFs and build your portfolio based on, again, your risk capacity, your personal situation, and all these things. And then you learn about execution. So how to, for example, here, how to pick a broker and how to open a brokerage account and how to actually make the transactions on the broker. And then you actually do it yourself. So you actually do the execution. And finally, you've learned about how to deal with things over the long term, which often are emotional things, details, keeping up with certain news, etc. And you apply that into your life to stay the course and profit long term. Now, what we like to do in Fire Belgium and with me and Tone is that we put all of this information that you develop for yourself in your personal investment plan, because then you have it on paper. It's 1-page document and it has everything you need for your investment. It's fairly simple, but it's worth having printed it somewhere that it's visible, so you're not tempted to simply react emotionally to anything that happens. Right. So what you need: investment knowledge, mindset, personal investment plan, execute portfolio, and long-term success. And this is what the index investing online course does for you, right? So this is one of the ways that we have to support people, and one of the ways that Fire Belgium makes money, which supports most of its activities. And again, I'm not paying myself. So mostly I've been volunteering for the past 4 years. But this is exciting to do, so I like doing it. Let's go. How to select your broker. For those of you who have listened to the podcast and you've seen episode 11 was the full overview, but episode 10 was the 4 key criteria. And we use those in the Fire Belgium broker comparison table as well, of course. And I've listed them here in order of importance, which is also how we address them in the podcast. So security, often something that beginner investors will overlook, because most people will start by focusing on costs, assuming that the rest is kind of okay and is taken care of by someone else. And so most of the conversation on the line will be on costs. And the reason I wanted to do an episode specifically on the criteria is to debunk that. Cost is a secondary criteria, mostly because if you were to lose everything, then it doesn't matter how much it costs you to make a transaction if you have a security problem and if potentially you could lose something. If you don't have access to investments that you want, then also it's not really worth it. And then it has to be convenient because you want to use it without making mistakes, especially when it comes to taxes. So this is why we've ordered things in that way. And we're going to discuss those 4 elements when we look at the brokerage table. So I'm not going to go into great details here, but also wanted to say that for some people, a certain order of things can be changed, right? So security stays the priority number 1 that everybody should look at, and most people still overlook. And we want us as investors to focus on this because we want brokers to respond to our requirements and our needs for security. It shouldn't be only the regulators asking for a bunch of things. It should also come from our side. And so we, as investors, and me and Ton as representative of a group of investors, we want to highlight certain things that are important to know about security so that brokers can address them and improve things. So that's one aspect, but also so that you are better aware of what's going on. Access usually is not a problem because most brokers give access to most things we need, so that's fine. And then, as I said, for some people, cost can be more important than convenience, and that would be people who are familiar with taxes and how to deal with taxes, and maybe have an accountant or have some kind of technical team and support to actually deal with this properly. But for most people, you want to have a broker that deals with taxes for you, basically, because it can be complicated and the fines and the penalties for doing it wrongly can be quite high. Right. From here, the best is for me to, I think, I'm going to share my screen and put the table of brokers up. And what we will do is we'll take questions. I don't know if there's questions in the chat because I haven't looked at it yet. But I'm going to stop sharing for now. And I invite you to turn on your microphones and your cameras, and we can have a conversation around brokers. In the meantime, I will go and get my broker 5 Belgium broker table overview. I'll put it on the screen as well. I will share it so that everybody can see. This is the right way to do it. Yeah, we can do something like this. I'm going to share my screen in a sec. Here. So basically, me and Tun are here to help to respond to answer your questions here. So this is the table. Like that, you can see it better. And I guess some of you might not have watched the podcast. But I'd be interested to hear, first of all, is your feedback on the podcast, if you found it useful. And then if you have any comments, suggestions, or questions about the actual table. Maybe, does everybody have the table? I guess that's something we could do. I can send it. I think I already shared, no? I shared the link to the table in the chat. Yes, I did. Okay, so you can get it from there. Just simply make a copy, download it for yourself. Right, so here we go. This is a Q&A session, so I'm hoping some of you will actually take the mic and ask questions. Or put it in the chat if you're really, really shy.
Hello.
Hi, Thomas.
Hello. I got one question. For Trade Republic, they say that the taxes, you need to take care of it themselves. I mean, the basic tax you pay when you do a transaction.
Yeah.
But then on the website, they say they're working on it to get it implemented. But I don't know if you know more about when this would be implemented, because without this, I'm really thinking it's too much of a hassle to use them, in fact.
Mm-hmm. Yeah, we spoke to them yesterday. We met with the CEO at an event with Ton. They need to establish themselves in Belgium to be able to deal with taxes. So these 4 elements here. And they are not established in Belgium yet. They're still based out of Germany for Belgian residents. And the establishment is something that takes time. And from my understanding is it takes 2 years. And they've kind of launched in Belgium in November, so 6 months ago. So I'm expecting this to be another 1.5 years at least. I don't know if it could be a bit faster or if it could take longer. But I wouldn't expect them to be here in the coming year, no.
Okay, yeah. And also one thing maybe for your information, my wife tried to set up, or she made an account in Trade Republic, and transferred money from a common account with me, but my name was not registered in Trade Republic, and then they don't accept the transfer, in fact.
Yeah.
So that was also kind of a disadvantage in a way.
Yeah, I mean, she would have to go through an individual account or open a joint account with them. I don't know if actually.
Yeah, basically you need to do a joint account on Trade Republic if you want to transfer money also from a joint account.
I don't know if they offer joint accounts. What we've identified is that they have individual accounts, and we don't know if they do joint accounts. So Trade Republic is quite new. Is one of its fastest growing brokers. And I think they're promising, but they also have lots of challenges due to that growth and to their innovative business model. Because one thing that they do is they don't charge much for transaction, but they do charge. They do get paid through payment for order flow, right? Yeah. Which it doesn't show here properly.
But meaning also that they you get the same bid and ask prices as the other brokers, or do they make a margin there as well?
No, so what they do is they route all the transactions through a different trading venue, and which is not the main stock market. And by doing so, they actually reduce the cost of transaction, and then they get payment for the flow, and they get also a cut from the ETF providers or the fund providers. So they're basically fully paid through commissions, but they maintain very, very low bid-ask spread. And so you can trade at a very low cost, even in some cases more competitive than the regular stock exchanges, especially because they're not there, because they found one.
So you don't pay a price as a customer for that?
Not yet, because the money has to come from somewhere, right? So this is the whole argument here and the whole conversation that they're having. And I don't know how much we can disclose of this because it's not so. Yeah, I mean it's half public, but basically the regulators are questioning their practices because it has gone really poorly with other brokers, right? Non-EU regulated brokers that are doing payment for order flow, the likes of eToro that are not here and that are basically inflating the bid-ask spread, as far as I understand, and making money like that. This is seen very badly. What happened with some of the companies that do payment for order flow and the scandals in the US, that didn't go so well, and so they are facing that. They're facing tough questions based on the principle of what that means. No, they get paid from the provider. That means that they're there to serve the provider. They will do what the provider says in a way, since that's who is paying them. There is a conflict of interest inherently in the way it's set up. Obviously, they don't want to be seen like that. They don't want to communicate like that. But it is, it's difficult to trust when you're not the one paying for the service, and the one that's paying for the service is basically the product that's being sold to you. So this is a complicated conversation, but in practice right now, it seems that they are able to offer lower cost transaction and prices for investors. And so that's very good. And I think they would be worth testing if they were dealing with taxes in Belgium. That's not the case for the next year or year and a half, but I'm waiting for it to come. Something that they do have that's really interesting is the monthly saving or the monthly investing plans, where you simply commit to invest on a monthly basis into specific ETFs at a very low cost. I think it's almost free. And that is amazing. That's a feature that other brokers should offer. I think there's a couple of brokers who do that. I'm not sure which ones anymore.
Just an automated
automated investing in specific ETFs, monthly.
That's interesting, but if you do it automated and you still need to file for the tax manually,
in this case, it doesn't work because of taxes. Yes, it's still a problem. And even though once you figure it out on your own, it's okay. It's kind of like the same every time. It's still something that most brokers do for you. And so you don't take a risk. And here you do take a risk, and it's a hassle. And I have to handle this on my own as well, because I'm investing with a broker that is not dealing with tax and transaction. And with all my experience, it still is a problem. Right. Despite me doing this for years now, it still is every time I'm investing or selling, mostly now because I'm not investing anymore. I'm just selling my ETFs and I live from it. Then I need to deal with taxes, and every time it's like, oh, we have to do this. We forgot. Okay, let me look at the thing again. And
but for you, it's still worse than the lower cost is.
No, I'm doing it because my whole. Okay, so personally, I've started investing when I was in the UAE. I've invested in dollars, and so I have just historical reasons.
You don't want to transfer it to another.
And the transfer is complicated because some of the ETFs that I'm using are not always available and they're all in dollars. And so, yeah, I mean, I could still make a few changes and pay for a couple of things extra in terms of converting certain things. I moved my portfolio to one of those brokers, but because we have the system in place, we haven't changed it. We've optimized our system way before all of this work, and so it's working on our side. But I've worked with hundreds of people, and I don't recommend it because it's a pain for me, and I'm living in this world, right? Most people don't want to have to deal with this. It's a risk that you don't want to take. It's really not worth it. The cost of failing is way too high.
Okay, many thanks for your clear explanation.
Yeah, and then another thing that's important to say, we talk about cost of investing. Cost of investing is important, as I said, but it's the fourth criteria, right? And even as the fourth criteria, some costs are more important than others. The ongoing cost of for example, ING, they have an ongoing cost per year per line. That is a real problem because it's an ongoing cost on the entire portfolio each year. Like this is the same as the total expense ratio or the management fees for a fund. That's something you want to avoid. The transaction costs that we're talking about with these brokers are all very low. Like even the most expensive of all the brokers here at 15 euro, 25 euro per tranches of 5,000 with KeyTrade is still relatively low if you are able to invest, those kind of amounts. It's still relatively low compared to the impact of the ongoing fees, for example, for ING, or the impact of a 1.5% management fee for an active management. So we already, by investing through those brokers, it's already very low cost, just not ING. And the difference between, paying 7.5 or paying 15, if you invest quarterly, for example, instead of paying monthly, then it's a minor difference long term. Anyway, just to clarify that, yes, it's interesting that it's free, and I think it's a strong marketing tool for them, for Trade Republic, and it's working, right? Because people don't want to pay for stuff, they expect everything for free, so that's what Trade Republic offers. But the real impact on your portfolio long term is minimum if you learn to manage a bit those fees. That's really something quite important.
I've got one little other question. I don't know if it's in the table, but I've also a Saxo account. I'm from Bank originally and transferred to Saxo.
Yeah.
Now there are some problems that you cannot buy everything. And even I wanted to buy a stock, Nokia, which was traded both in Helsinki and also in Paris. But they say, you cannot buy it via us in Paris, only via Helsinki. So they're a bit restrictive on the things you can buy.
Yeah, they have, I think it's the transfer of ownership from being bank to Saxo, plus the new regulations that Saxo has to implement. And they are, I think, stricter than maybe some other brokers. So sometimes they don't provide access to some of the ETFs and stocks that we want. And it changes over time. So sometimes they're not available, and then they make it usually is a documentation problem. And when the documentation becomes available, then the investment vehicles are available again.
But the other brokers have the same issue, or is it? Do you think
less so?
Less so.
Yeah, I've actually seen the opposite. Mostly, for example, we've used Bolero, Degiro, and actually Saxo Bank quite a bit. And Bolero has been very fast to respond when we ask for a new ETF. So if you find an ETF that's really good but it's not in the platform, asking them, they respond very fast and they actually provide access to it. And we've seen that with Bolero. I think we've seen that with Degiro.
But you mean ask it? You ask it in because you have a
as individuals.
As an individual, you can ask.
Not even me. Like people people that I'm teaching how to invest, and they say I want this ETF, but it's not on Bolero. I say send them an email.
Okay.
A week or two later, it's there. Like okay, so.
Don't be hesitant. Don't be afraid not to ask.
And so even Saxo Bank, if they get the request, they'll see if they can include it, right?
Yeah.
Sebastian, could you please maybe share on the screen back the slide that shows the details of these criteria? Because in this file, it's too small to read.
Sorry. I'm going to change to this. Okay, this?
Yes. So I also have a question here, actually, regarding security. One of the points you mentioned here is beware of security lending.
Yeah.
So actually, my question is, actually ETF providers like iShare, for example, actually they also lend your security or part of it. So what should we actually pay attention here more?
So it is common practice in the fund management industry to have security lending, and they do it up to a certain percentage. It's regulated, of course, and it's something that I think most fund managers do, right? Even with index funds. So that's fairly common. For brokers, it's not so common. And there's one that does it a lot in Belgium, and it's Degiro, or in Europe, no, Degiro. And we didn't really know what to think about this for quite a while, even with Ton and the community. And we were saying, well, that's just, we know there's a small risk there. There's obviously there's a guarantee, there's collateral, but it adds basically counterparty risk at a couple levels. But we're really not sure how to quantify it and whether it was a complete deal breaker or not, right? Until actually Ton read the whole terms and conditions. And when they do lend securities, so security of your investment is mostly there because of asset segregation. So the investments that we have as index investors or investors in general using those brokers is not with the broker itself, is not on their balance sheet, is with the custodian account. It will be on the custodian in a separate entity that if the broker goes bankrupt, then that's the money that's on that entity is untouched and your investments are still your investments. It doesn't matter what happens to the broker, right?
Yeah.
So that is the core element of security for our investment. And that's the main reason why we trust those systems. Now, when security lending takes place, the money is not on the custodian anymore, right? So the money comes back on the broker's balance sheet. Yes, there is guarantee. Yes, there's collateral. Yes, there's regulation, but the money is not on the custodian. And so from that perspective, it's a tiny extra risk that we'd rather not have. Another aspect that's complicated that we don't like so much is that we don't have a way of verifying how much of our securities are being lent at any point in time. And the Degiro doesn't want to tell you. And so, we, in a way, if it was transparent, we wouldn't, I guess we would be a bit more open about it. But it's not very clear when they present security lending that, this custodian thing is not exact. I mean, it's in the terms and conditions, but most people don't read them. So we do that for you, for everyone. And we've identified this as being, an unnecessary risk. And we don't say it's a deal breaker, right? We don't say leave them because, from what we understand, they're highly regulated and regulators are really coming after them on everything that they can because they've had issues.
Yeah.
But that is one point that for us doesn't work. The money, we don't know how much is actually not on the custodian account. And that is a problem. Yeah. Again, we're not saying it's a deal breaker, right? We don't know the details of how much risk this means, but it's something that doesn't exist without the brokers.
Okay, thank you.
Yeah, no problem. So it's anyone? Questions? Hi, Philippe.
Hi. Thanks for all the information that you're already sharing. I just got a question, like, could you go over all the aspects of the convenience part? Because I don't understand them all.
Yeah.
And maybe more, especially the difference between Bolero and Degiro, because these are the both brokers that I currently have in my portfolio.
Absolutely. Yeah. So convenience normally is more than just taxes. Convenience is also a bit like the user experience and those kind of things. No, but for this table, because user experience is really hard to rate, we didn't include it. But usually user experience is something you kind of want to also have that's quite good. And so we didn't include it there, but normally that should be included. Now, the next level of convenience is what kind of paperwork do you have to deal with? What kind of stuff do you have to stress about, right? That's kind of what it is. And mostly that's related to taxes in Belgium, simply because it's a bit complicated and Degiro is not based in Belgium, but Bolero is, so it makes a few things different. Now, the tax on transaction, which is the main tax that most people think about when they're investing in funds in Belgium, that is taken care of by Degiro and Bolero. So that's fine, right? There's nothing there that you have to worry about. Dividend tax is normally something that we have to declare if we get dividends. Most people who invest in the way we like to teach it don't invest in dividend distributing ETFs or stocks, because then you have to pay a tax on the dividend distribution. Now, for stocks, it's different because you have a certain threshold up to which you don't have to pay those taxes, but above that, you would have to. So basically, it just adds complication when you don't really need it, especially because you have accumulating ETFs that are exceptionally good and for which the TOB can be very low too, the tax on transaction. And then you have the bond ETF capital gains, which is something that most investors do not experience, like long-term index investors like us. It's very rare that we sell bonds. We don't make much gain on it. But when it happens, it's better if it's taken care of, because it's something that most people don't think about. And Degiro doesn't do it for you. They might tell you, oh, you have to file this in, you have to do this. But it's basically a bit of extra hassle, right? And
these gains are only applicable when you sell the ETF.
Only when you sell an accumulating bond ETF, yes, an accumulating bond ETF, right? Or an ETF that has bonds of more than 10% of bonds in it and does not distribute dividends. So it's a very specific category of ETFs, but it's something that most index investors that follow the way we like to invest would have. And the sale of this ETF is rare, because when you're contributing, you don't sell much. You do the rebalancing by just buying more. And usually by buying more bonds, because stocks tend to grow faster. So you usually buy more bonds rather than stocks, but you don't sell bonds in most cases, except from when there is a massive market crash and you have stocks that go down really deep and bonds hold, like in 2020, in March 2020, right? Then if you rebalance at that point, you'll be selling bonds and buying stocks to rebalance and benefit from, obviously, that thing and the power of rebalancing. And at that point, then you have an event where your bonds are being sold, a very small part, obviously, because you don't sell all the bonds, and you make some capital gains, hopefully. So it's like a small part, a small capital gain, and there's a small tax on that. And it's better if you don't have to worry about how to declare and all this, because it doesn't happen very often. So you can't really build a system around it. And then it's just annoying to deal with. So that's one thing. It's rare. So most people don't experience it until they actually have either a big crash and they rebalance, which is very hard. Most people have a hard time rebalancing when stocks are going down. Buying more stocks is not easy. And the second time when this happens is when you retire. But even then, it's actually quite rare. We've mostly sold stocks since we stopped working 5 years ago. Why? Because stocks go up, right? So whenever we checked our portfolio, we're like, okay, we have to rebalance so that we don't have whatever. Usually we don't want to have too much stocks because stocks go up. So we sell stocks. We don't sell bonds, right? But it happens once in a while. I think we had to sold bonds. We sold bonds twice or once. I'm not sure exactly. So it's rare. So the capital gain tax on bond ETF is not something scary, but it's annoying to deal with tax-wise, right? And finally, the registration with the National Bank of Belgium, is done for brokers that are based in Belgium. It has to be done if you're with Degiro or any other non-Belgium based. So that's also including Links and Trade Republic, and maybe one more. I don't remember. Yes, and Maxim as well. But yeah, that's one thing to do once, right? You have to do that once, and then you have to declare your account on your annual tax declaration. So there's a bunch of small paperwork stuff. I mean, it doesn't hurt. It's just annoying. And if you miss some of the taxes, it can be annoying. And it could lead to penalties, which in most cases, we don't even notice until it's like way too late. And we're like, oh my God, we do the math and it's like thousands of euros of penalties, which so far hasn't been enforced, but the day they enforce it, it can really be a pain. So these are the main things, right? And then for Degiro, don't forget, if you do register, or you have to register with the National Bank of Belgium, you have to register both Degiro and your flat-tax account in Germany. Right, so these are the technical details of that convenience stuff. But again, aside from that, Degiro is a great platform. So it's just like kind of a, we don't have anything against them really. It's more, this is what it is. That's the truth. And we value convenience a lot, because the people we want, that we represent and we defend with Fire Belgium and myself and Ton, is the people who are, that would benefit the most from a very simple and effective approach to index investing that doesn't require much work, where everything is taken care of, where it's automated, they don't have to think about this. And we don't want people to look at the stock market and financial news, so we don't want people to be worried about their brokers and all this. So we really focus on finding what is the optimal way of investing that works for everyone, where you get the maximum returns, benefits, fairly well-balanced portfolio, so there's not too much volatility and taxes are taken care of, and security is the maximal, and like best practice stuff, right? That's what we're aiming for. So we highlight when that's not the case.
Okay, thanks. You just confused me a bit with that you need to register both your Degiro and Flatex accounts. What do you mean with the Degiro account? Because it's just like a Flatex account behind it, I thought.
Yeah, you have two accounts. You have the investment accounts, which is in the Netherlands, and you have the Flatex account, which is in Germany, which is just for the cash holdings.
Okay, I think I only registered the FedEx one, so then I need to do some more work.
Yeah, often that's the case. People do one and not the other, but yeah.
Okay,
that's the only broker where that's the case. I think with Links, actually, I'm not sure with Links, to be honest, because they use interactive brokers at the back end. So maybe there's also two things to register. I'm not sure.
Okay.
Yeah.
Clear. Thanks.
No problem. I see there's lots of questions in the chat. Everything okay? I'm not going to read all the chat. It's too much. But if there's questions you want to discuss over here in the main conversation, then please.
Sebastian, I've got a question. I'm still in the process to choosing my broker. Then I narrowed it down to two choices, Bolero and Degiro. And there was a communication by Bolero today that they are reducing certain costs. So that will make the Bolero even more attractive than before. So it's still not on par with the Degiro, but that little bit extra fee, I think it would worth for all the tax easement and the security. So I know that you cannot give any kind of you cannot decide for me, but I think I wouldn't make a bad decision with Bolero, right?
Indeed. And actually, I would be, I don't mind being broader than this. I would say, like, there's maybe just one of those brokers here that I would be against. Like, I don't mind anyone using any of those brokers. And so I don't think there's like the number one best. Yes, I have some preferences, and I've mentioned those in the podcast, but I have preference for many of them, actually, maybe too many. But the only one I would recommend against is ING, right? And maybe Maxim, because they are regulated in Cyprus. But even Trade Republic, I'm not against it. It's just you have to know what you're dealing with if you want to go there. And then Bolero, obviously, it's good. The news of, they have basically now a short list of ETFs for which costs are lower. That's amazing. Because it makes them even better. I don't think it's a complete revolution, but it's good. And now just be aware that it doesn't include all the ETFs that you want, but some of them. So it might influence your choice of ETF, but I wouldn't want that to happen. I would rather you pick an ETF that's correct and right for you long term, especially because TR has a high impact, rather than than have that decision made because it's slightly cheaper at the transaction. Which a lot of people do with Degiro, no? They want to invest for free, so they pick one of the shortlisted ETFs on Degiro, and sometimes it's not the best solution for them from a choice of ETF perspective. But it's just one criteria. So yes, it makes them a bit better, obviously, because reducing cost is interesting for us. But it's only, again, just one criteria. Yeah.
Yes, and there was one more thing that now they're offering the fee of 250 euro per year or something for companies. But some say, I think only you guys, that it's not really worth to invest through a company. So it's not really so much. It doesn't make so much good for us. If they make this cost very cheap, it's better to invest as a private person, right?
It's more tax efficient to do it as a private person, but sometimes you optimize that, and then the rest you invest with your company. That's also okay.
All right, I think I got my choice. And also, please confirm one more thing. What Ton already, I think, mentioned in the chat, that it's always better to go with one trader, so your whole portfolio is in one place, so it's easy to review what you have, so you don't need to jump between 2 or 3 platforms, correct?
That's right. Yeah. So it's a tricky question because some people say I want to diversify the brokers I have. And there's two aspects to this, three maybe. There might be a point where it makes sense to diversify, have more than one broker. But I would say that should be driven by access to specific products that you want to have. When you do that, knowing that there is a tax on wealth in Belgium, then just be aware that you have to handle those taxes. When you get to 1 million in your portfolio of investments, then that becomes something that you need to be aware of. You do want to make sure that they understand that you want to pay your tax as you're supposed to, not trying to evade taxes by having two different investment accounts. And finally, yes, when you select a broker for their security level, having another broker doesn't necessarily reduce the risk of anything from a security perspective going wrong, but it could help in case of, say, you need access to funds and for some reason one of the brokers doesn't give you access, which never happens, but that I would say that's maybe one reason to have more brokers, but that's not like, usually it's unpractical. It doesn't help when you're getting started, and it's something that you might want to consider when you do like a full overview in the future and you consider the pros and cons of different things. But when you're getting started, you have one broker, 2 ETFs, and you keep that for as long as you can. That's good enough. And then adding another broker later, no problem, you can. It just complexifies things, and for most people, you don't want complexity.
Right. Thank you for your.
So it's a bigger response, but.
Thank you for it. I think it's much clearer now, and I think I will go with Bolero in the end. Finally, after weeks of thinking, and finally I got my decision thanks to you and this mail what I got from Bolero. So I'm happy. Thank you very much.
Awesome. All right, anyone? I see a lot of stuff in the chat, but it's good if we do discuss it over here also. So any questions, any comments?
I got one more question. It's not really broker related, but you mentioned also with the taxes distributing and accumulating.
Yeah.
I had bought recently, how do you say it, corporate bond from iShares. What is it? I don't know exactly the name, but it was a version. It had an accumulation version and a distributing version. And with Degiro with Saxo, I could only buy the distributing version. But in general, what would be the best, or let's say over the long term, the lowest taxes?
So there's two taxes, right? We have it for bond investments. We have the tax on dividends and we have the tax on capital gains. Now, the tax on dividend is something that you would pay when you get the dividend payments. So that's once every quarter or every 6 months. And you get cash on your account, and some of it is withheld and paid by the broker in most cases, unless you go with Degiro or some of those. And so that's one way you pay taxes. And you don't pay capital gain tax on those because you already pay taxes on the dividend. Now, for those that are accumulating, the ETFs, so the one that you don't have, you don't pay taxes on every distribution that comes to your account. You pay tax at the end when you sell on the capital gains. Now, the difference between those two, you'd say, but one you pay 30% tax, and I like to have some cash, and the other one you also pay 30% tax on capital gains at the end. So what's the difference? Well, for the one way you pay on dividends, first of all, the cash arrives on your account is not working for you anymore. You have to go in and invest it yourself. So you pay transaction cost and taxes on that. But mostly is, say, if you were ever investing the full dividend, then the dividend would be working for you more. There would be more money working for you there. But because you invest only 70% of it, then there's basically less money working for you from the moment you start investing. Whereas on the other one, which is, you get paid, you get taxed on capital gains at the end. Basically, you have more money working for you throughout, and you get taxed at the end at 30%. But you get taxed on something bigger because your money gets taxed at the end. It means it has more time to grow. So it is usually more interesting tax-wise to have it to pay tax at the very end on the capital gains. Yes. especially that we barely sell it. We barely
no, indeed.
So it just
in this
grows
case,
your
it was
portfolio.
easy because I didn't have the option to choose the other one, but
it's still better to have a distributing bond ETF than no bond ETF at all. So
that's a good thing to know.
I think it's okay because a bond ETF plays a role that's way beyond just generating interest.
Okay, thanks.
I have a question too. It's not exactly related to choice of broker, but
no problem.
Has anybody, since the interest rates are on the rise, and although in Belgium they've been capped, in other countries this is not the case. So I wonder if it's becoming more and more interesting to put some of the free cash in a money market fund, because those are really exploding if you look at some of the graphs on Morningstar.
Yes, and by money market funds, you mean treasuries and short-term bonds, yeah?
Yeah, those kind.
Absolutely. I mean, I can. If anybody has experience with this, please come online as well. But I can tell you that yes, short-term bonds have high value now. They are generating good returns because interest rates are high, and it's far better than savings account because banks are just super slow at raising the interest rate. They're trying to make money off of it, right? They get they pay very little interest to their clients, and then they get high interest from the bonds that they buy from the government. And why wouldn't we buy those bonds? And basically, money market funds and short-term bond ETFs are that. You can lend money to the government that pays you a high interest rate instead of to the bank who pays you a very low interest rate. And so for us, as part of the course of index investing, we do highlight a couple of really good short-term index bond ETFs, and they're excellent right now. So I'm saying right now, but the way we build investment funds, the way we build our portfolios is for the long term, right? Short-term bonds and money market funds have the advantage that they respond very quickly to change in interest rates, and they don't vary too much. So they will be less volatile than, say, an intermediate term bonds or long-term bond ETF, right? And so that is an interesting part. But if you pick a medium-term bond ETF instead of a short-term bond ETF and you invest for the long term, you benefit from those interest rates as well. It's just that it's delayed, right? So the way a money market fund works is that there's money there that buys short-term bonds that are, or treasury bills at 3 months, 6 months, 1 year, whatever. And they renew every time. So which means that they quickly catch up on the latest interest rates. When interest rates go up, it means that the bond ETF just has a higher interest rate faster than the medium-term bond ETFs, which take longer to renew their portfolio of bonds, but they also are getting higher interest rates as they progress, right? It's just that it happens more slowly because they have bonds that are 7 to 10 years long, longer. But they will benefit from this too as well, right? It's just that for that benefit to materialize, you have to hold them longer. And that's it. If you invest in medium-term bonds, you hold them longer, you get the same benefit as if you invest in short-term bonds, just that you'll see it faster with short-term bonds and they're less volatile, which is a very interesting thing. So yes, highly recommend.
And where you mentioned also some example that you recommended some good funds, because I tried to look for it myself, but I was not really able to know which ones were good or not. And with short term, I also thought short term is now interested. So between 1 and 6 months average duration or something. But
we do that work for the people who take the course.
Okay. So
we do have a short list of stock ETFs, short list of bond ETFs, about 20 for each. That are all the time up to date, and there's 2 really good short-term bond ETFs. I think I can put in the chat for you to look it up. One is called PRAB, PRAB, and the one is PR1H. I think I'll have to. I think so. These are the tickers, and I think with this you'll be able to find them.
And they're euro denominated.
Yes, one is a U.S. Treasury bond ETF. That is euro edged.
Okay.
That's PRAB. No, that's PR1H. And the other one is a euro bond, also short-term bond ETF, less than a year. Yeah. So yeah, look, actually, that's an interesting way of segment, like moving into the other topic. The table that we've developed here, up to a few months ago, this information was only for the people who took the course. Obviously, in the course, we go deeper into helping people actually do this, right? We select, but we also open, we do the trade, like we help people actually make the transactions, find ETF. And basically, we take people from not knowing anything to doing the whole thing. There's very little guesswork to be done. But there's a lot more in the course, obviously, like this, including the ETFs, the analysis, the selection, and then the short list. It's all in there. So for anyone who's interested in getting support, either through the course or with one-on-one consultations, we're available, and we're happy to support in that way. But the resources are mostly in the course, indeed. And on one-on-one consultations, you can have access to them as well. But the course is the most effective way of learning.
Okay, yeah.
Anyway. But yeah, check them out, and hopefully you find them. They're short-term bonds that are basically money market funds. And from what we've seen, these are the two best that are optimized for Belgian taxes and for all the criteria that we have when we select our ETFs for basically all our students. And so for those of you who are looking for the course, maybe I can share. I'll put the link in the chat as well. I don't know if I've shared it before. Here. So those of you who are interested, you can take a look. It's there. This is the full description of the course. Right. Your name is David. I'm not sure because I see only 3 letters, DVD.
Yeah.
No. Okay. Any other questions?
No, it was just some thoughts to share.
Okay.
The money market funds are becoming finally interesting again.
Yeah.
Absolutely. I was wondering if somebody else had something to say about it. What experience?
Yeah. If anyone want to take the mic and share the experience, very welcome.
Yeah, I can shortly comment that I'm involved in that as well now, but not in Belgium. I mean, not in Europe at all, because although the interest rates are higher, they are still low. I don't want to recommend anything, but I would just look across the other side of the Atlantic, if that makes things clearer.
Yeah.
Because you can get now more than 5% there.
Yes, absolutely, in dollars. Yeah.
Going back to this topic of this session today, Sebastian, there is a question that I saw also in the chat.
Yeah.
In case you want to move your securities from one broker to another.
Yeah.
And I'm not sure I see it in your table.
No, it's not included.
So different brokers have different costs for that. Mm-hmm. This could be a criteria to look into as well.
Yeah, I think it makes sense for people who have portfolios with a lot of different investments. So far, what I've seen is the highest price for transferring money out of a brokerage account was 100 euros. And that was with Degiro in the Netherlands. Everyone else that I've looked at, there were much lower costs, I think 50 and 25 per line. So if you have 2 ETFs, it's 2 times 25 or 2 times 50 or 2 times 100. So I think this is a cost that is important for people who have very big portfolios with lots of different stocks and ETFs and all that, because then it becomes expensive to transfer out. For index investors with 2-3 ETFs, normally not so much. But yeah, I think we could add it to the costs overview because it's an interesting point and interesting information. And you're interested to know like just the cost or also like the admin part? What's your
the what? Sorry.
You're also wondering about how it works like practically?
Well, personally not, because I don't have any immediate intention to do it, but it is a good question because
yeah.
There's sometimes could be technical difficulties with some of the brokers. I have no ideas between the ones listed here, but I don't know, maybe other people have experience in that.
Yeah, I'd be interested in hearing that too.
I happen to know that sometimes, well, that's maybe because I'm coming from another country, then you have to go through a real bank to do that and not directly from one broker to another.
Yeah, no, we don't have that here.
Okay.
I've transferred from one broker to another twice now. And it's just a bit of paperwork. It takes sometimes a few days, maybe a week, and that's it.
So there is an international broker called Interactive Brokers that I happen to know that they do not receive securities from a broker, but just from a bank.
Really? Because I've done it. I went from Saxo Bank to Interactive Brokers at some point.
Okay, so maybe it's relevant only to some countries.
I was in the UAE, and I was using Interactive Brokers in the US, which tend to be the most strict. So I don't know. Look, maybe it's changed, right? Because this was quite a while ago. 2014, I think, something like that, 2015.
I think it also depends how much it's in ETF, of course, because sometimes it's just cheaper to sell it and to buy it back in a new broker.
Sometimes, yeah. If it's a very small portfolio and you have very low transaction cost, then you can sell, transfer the cash, and buy again. Now, when you do open an account in a new broker, and you bring a large amount of money, which this might be the case, yeah, if it's a big amount of money, some brokers will say, well, we don't accept that money because it comes from, say, for example, when I came back from the UAE to Belgium, they were just asking question, where's this money coming from, right? And sometimes if you don't have the proof, I don't know if they would accept it. But yeah, I have proof that I've made this money with my job, so it wasn't a problem.
Okay.
But so that might be one thing as well. They ask where the money comes from.
Okay.
Cool. Yeah, that's a good question. Maybe we can add. I mean, we've received quite a lot of feedback on the table of a few suggestions for improvement. So we'll do version 2 at some point. Well, we're not doing that right now, but we'll do version 2 at some point. We're working on the new version of the course, so that's what's going on, which will come normally for end of the summer, which also will be more expensive. So interested in the course, join now, because in September it might be more expensive. Probably will. And those who join the course now have access to the new version later as well anyway. So anyway, for those of you who are hesitating, don't wait. Right, any other questions?
I have a question as a beginner.
Hey, hi Hugo.
Hi. Are there any platforms that are more beginner friendly, more easy to use for new people in this area?
I'd say they're all fairly similar. Ton, I don't know if you have any comments on this. I have experience. So some of them feel clunky, but once you've done it once, it's really easy. And some of them are a nice UI, but they have more information. That's kind of, so it can be seen more complicated. So it's difficult to tell. I would say, what doesn't hurt is to open an account with all of them and just feel it for yourself. But I find Bolero and Degiro to be quite good. I don't have experience with KeyTrade. Saxo Bank felt a bit clunky last time I tried because they've taken over from Big Bank. And I don't have experience with the other ones.
Okay, I guess I just have to jump into it then.
And I would say most of links will be interactive brokers, so that could look a bit complicated. But again, despite the complication, once you know what you care about and what is completely useless to you, then you only look at what you care about. And I think it's more in learning to handle the information that's there, because it's obviously all of these platforms are built for active traders. They're all interested in you trading more and more. So they will make that easy, and they will not necessarily make index ETF investing easy. And that's the case for all of them.
Okay, great. Thank you.
Any other questions? I see the last question here from Luc. The Dutch course will come in September. Yes. So we're revising the entire course in English and creating also the Dutch version of it. We currently have a recording in Dutch. We will have it an even better version in September. So look, if you're interested, let us know and we can show you a bit what it looks like. You can send us an email or, oh yeah, we can discuss that. I'm gonna go back to the chat. Ton, is there anything that from the chat that stands out that you think we should cover?
I answered the question till the last ones that I haven't read yet, so I'm quickly checking.
But are there any of those questions that would be beneficial for everyone? Because not everyone is in the chat and a lot of people watching the replay will not see it.
One question about expats that is also considered during the broker research.
Yeah, for example, language, no? So this is a question from Yamiel. We don't have that as a criteria, I think. Language available for the information and for their website. I think most do provide an English platform, English-speaking platform, but not always by default. So for example, for Degiro, you'd have to open an account with Degiro in Ireland. That's my understanding. In Bolero, you can have access to the account in 3 languages. You can choose that. E-Trades, I would assume it's the same for them. Saxo Bank, I would assume it's the same. I don't remember exactly, but for sure French and Dutch. Rebel, I'm not sure because they're very much a Belgian platform, so I'm not really sure there. Links is in English, it's fine. MeDirect, Maxim, Trade Republic will be all in English. So mostly yes, English available. And yes, there are lots of expats in the community, Yamiel. And I am myself sort of an expat that's come back home, so it's similar. And I do like English over French even. So, but yeah, it's a good question, and maybe we include that as an additional criteria to look at next version. Was
wondering, Sebastian, if you checked auto investing in all the platforms.
Yeah, we need to add that as well. Yeah.
Because from convenience point of view, that makes it really.
Yeah, absolutely, really absolutely. Yeah, and I also want to know, because to me this becomes a really important criteria from a convenience perspective. I actually would recommend that, and I would want all of them to do it. Like my goal is to replace the savings account with this kind of stuff. So the simplest it is, the better. I would say I will go one step further if anyone's interested in this. But to me, I believe we should be paid in shares of index funds and not in bloody currency that's worth nothing. We should all be paid with a share of the whole global economy, and then we will be investors and we will all be, sort of benefiting from global growth. And I wish that was that to me, that's the ideal currency is not crypto, is not euro or dollars, it's a share of the global market.
Yeah, I'm just afraid
what's that?
Is everybody wants to buy more shares, the price earning ratio go up? Don't you think it gets all inflated?
No, but this is just a new normal. I think there will still have to be a lot of balancing to do between the different asset classes and the different stocks, and so there's got lots of work for active investors to rebalance all this. But then we will have more capital to work with, right?
Yeah.
Something that the European Union is trying to do is just get people to invest more, because money sitting on investment on savings account is useless. And if it gets invested, then it works for the whole economy. And there's also benefits to that, even if it increases the price to earning ratios. Yeah. But yeah, that would be interesting to see if there would be an impact there and if it would be negative.
Quick question to pick up on a previous remark there.
Yeah.
Is anybody aware of any broker that does automatic investing in index funds? I know KeyTrade has Keyplan, MeDirect has some stuff, but these are not ETFs.
So Trade Republic, they have, but you have to deal with taxes yourself.
Oh, okay.
I think that's it from these 10 brokers. The others have indeed a kind of investing plan, but that's for most of the brokerage companies. It's based on active managed funds. Some advertise or some say zero costs, zero cost to enter the plan. But then when you look into the details of those plans, you see active managed funds with costs between 1 or 2% per year, for example.
Yeah, indeed. Okay, I'll take a look at Trade Republic.
But we hope indeed that a lot of brokers change direction and will offer those automatic plans for ETFs in the future.
Yeah,
that would be ideal. And then you make it an automatic savings account that goes straight into ETFs and put that for everyone in Belgium, and that's it, victory. We kick out most of the industry, it becomes useless, and then it's much better for most people. Sorry. Sometimes I tend to be extreme there, but no, but yeah, this is an excellent thing we need to add to the next version. It's already been recommended a few times, and I think it was from you as well, Manu. Any other questions? Anyone hesitating between brokers, or anyone considering changing?
Yeah, sorry, me again.
No problem.
I'm considering changing from Bolero because, as most people remarked, they're changing some of their tariffs, but they're also introducing a €250 per year fee for people who invest through their company. And yeah, there are pros and cons to investing through your company, but sometimes, yeah, as you mentioned, sometimes it's a compromise, but it's very annoying that you have an extra fee on top.
So that was not the case before?
No, that's part of their new arrangements. It was suddenly a €250 fee. I think it's the only broker that makes a special cost for companies.
Yeah, special. That's kind of strange. Yeah, it's a shame. And it's a fixed cost. That's good, but still, I don't know why they would do that. Yeah.
They explain that they have a lot or more administration with investment clubs and companies. So that's the reasoning they say that's behind those costs.
So the thing is, it will impact small company owners, right? But it would probably not change much for the big investment clubs and things like this. Interesting.
And well, one of the reasons I use Bolero because I have a private account and a company account. And for example, if you say you wish to pay out dividends at the end of the year, you can actually choose to, as you mentioned before, use an ETF as a currency. So instead of paying a dividend in cash, you can actually pay out part of your portfolio by doing a transfer from the company to yourself. That's why I was interested in Bolero, but I wonder if there are any other brokers that have this, where you can actually have a private and a company account. I know Keytrade does it. Bink, well, Saxo still has it, but I wonder anybody know about the others?
So we looked into this with Ton. So we have company accounts for Saxo Bank indeed. And sorry, there's too many pop-up windows on top of everything. ING, of course, yeah. And Maxim has it.
Okay.
So you could check Maxim probably. This is actually what we've seen on the website now. Sometimes it's not complete information here, but yeah, we've got most of it. So yeah, check Maxim, maybe that could be an option.
Okay, I will, thank you.
Yeah, no problem. Any other questions? I see Ton has done a lot of work in the chat. Ton, thank you for that. It's really, I think it's very helpful for most people. Yeah, tell me.
One question, maybe you told it already, but in interactive brokers is not on the table, but it's kind of, yeah, you use it also. I mean, do you recommend it, or is it more for the, very advanced?
No, it's not even advanced. For me, it's because I had it before I came to Belgium. So I stayed there mostly because of inertia, not necessarily because I would pick that if I was to pick a broker now.
Okay.
And they don't deal with taxes at all. So, and they're not necessarily user-friendly. They're not easy to open. So it's not as simple.
So not recommended for
No,
us.
where I was before, so when I used to live in the UAE, it's certainly the very best option. But here it's not, and so no. It's
okay,
not even
okay. Yeah, no, because in the past I was looking at it. I think they had very low option. I was in options a little bit. They offered very low tariffs on that, but that was a long time ago.
Yeah. I mean, they're good. There's nothing against them as long as you deal with taxes and you can handle the platform. Then they're very good.
Yeah.
Okay. So unless there are other questions, we're probably gonna close the call. I'm gonna stop the recording, and we might make it available, but I don't think it will become a podcast episode or anything like that. So I'm gonna stop it now. Where is it?